everybody, it's Jeff here once again with the Money Tracker podcast, and it is Friday, and we're welcoming back Tom Kemler from BK Wealth Consulting for our Financial Friday, and it is on a Friday, Quadruple Witching. You'll find out what that means. We've got a mixed bag of economics today, and we've got the most interesting thing, which is we're going to be tying together a lot of the things that Tom and I have been talking about over the last years that we've been doing this, and really describe how that's being affected by kind of what the government's doing and everything else. So please stay tuned. We'll be right back on in just a second. Hey, everybody, it's Jeff here with the Money Tracker podcast, and we've got Tom Kemler on from BK Wealth Consulting. Welcome back, Tom.
Thank you, Jeff. Glad to be here.
Good to see you today, and it's Quadruple Witching today. So why don't we kick off with that? You can kind of give everybody an update on what the living heck that means.
Well, Quadruple Witching, and I'll share my screen. I have ever since we started doing the show, I have the experience of what the major indexes have done on Quadruple Witching, and it's uniformly negative. So
you can pretty much count on it.
You can almost count on it. It's a day where there's various expirations of options and futures, index futures, individual futures, individual stock options, and so when all these things, they have different calendars for 2 out of 3 months, but on the end of the quarter months, like March, June, September, December, they are all on the same day, and so it does tend to bring some volatility, and it does tend to be negative. Okay. And I would point out that uniformly, since we've been doing this, the market has been in an uptrend. So this is maybe kind of a counter-cyclical thing, but it is what it is. And so we've had a tough week, and it wasn't surprising to me with Triple Witching that we would have a tough day. So I would point to the overall trend, and that's still our friend at this point. And this is just something that happens on this day. Well, let's jump into some of the things that have happened this week. PPI is the producer price index. This was released earlier this week, and this shows some inflation that came in well ahead of expectations. And the numbers really, I guess the prior number was pretty high, and it was expected to moderate a little bit, and actually the numbers came in not moderating and actually accelerating. So these numbers are starting to, look like, the kind of numbers that we were seeing in the 70s, maybe the early 70s, not the late 70s when things were really out of control. But, definitely not a good memory. And again, I'm kind of intrigued that I listened to the Fed, I listened to a number of economists this week, Janet Yellen at Treasury. Everybody seems to think that this is transitory, and I'm not convinced of that.
You've poured so much money into the market, you've kept things, interest rates so low, and put so much, M supply or money supply in there. It's just gonna, it can't not push it up. Did you, I thought I caught something as I was running past one of the TVs here in the office. Wasn't China like through the roof today too on PPI?
Oh, they could have been.
Yeah.
I did not notice that.
Yeah, I thought I saw like a 9.1 number or something like that for China, which is insane.
Well, some of these are what they call base effects, and
Yeah.
the base effects is that we had that sharp decline in actual business and a lot of prices
Mm,
because of COVID last year, and
yeah.
so when you're looking at um, year over year kind of statistics, it picks that up. China imports a lot of they're the number one importer in the world by far of petroleum products, which are way up, as well as grain prices. I do have a slide, later on that shows, China and grain. So yeah, it doesn't surprise me at all.
Hmm. Okay.
Empire State, this was a number that's still strong, but came in at lower than expected. Atlanta, this is a survey the Atlanta Fed does. Inflation expectations are not 6%, but they're nudging up. They're well over 2. They haven't remained well above 2 for like 15 years. So and they're going up. They're up to 3. And then when the housing starts, this is not a good sign that we're getting a little bit less. The permit number came in below expectations. The starts number came in below expectations. And housing has really been an engine for our economy, and so this. It's a concern because this is about 3 months in a row now where the housing market has been a little flivvery. Import and export prices, these numbers are starting to look like the 70s. And as I've said before, import and export prices are kind of like the canary in the coal mine. This is what you can charge other people and what the other people figure that they can charge you. And so in that sense, it's like, they're the original transmission agent. If you're gonna try to be a little bit kind to your customers and maybe eat something and not get the last dollar, in your own market, that's kind of understandable. So that's why import and export prices, matter so much. And these are double digit, and even the month over month numbers are like over 1%. I mean, these are the kind of numbers that we were seeing for year over year, and now they're month over month. So that's
I guess the best way I look at it, if I'm looking at glass half full, is we're able to stick it to other people more than they're sticking it to us.
Yeah, export prices are higher, and that's usually not been the case. Now, why is that? Well, precisely for what we were talking about with China. We are a net exporter of energy.
Yeah.
So we sell a lot of that, and also the grains. I mean, you look at all the commodity prices. The United States, it's kind of sad, but we're more like a third world country when it comes to exports. Because we started to make some progress, but we really don't. Other countries game us and don't let our finished goods into their markets as much. And that's just a sad truth. So we sell oil and we sell corn and wheat and that kind of stuff, and defense goods and movies.
Well, but I mean, I guess the best way part of that is, like, especially with China, I mean, they kind of force it on us to open operations over there. So Apple's got a huge operation in China that's making things domestically, which employs Chinese citizens. And, we've got to partner with them, somehow in the government to be able to open operations. So yeah, it's a little bit of a different animal, I guess, especially with China.
Well, I mean, look at how we deal with Europe.
Yeah.
There's it just, the Europeans are very, we talk about free trade in this country, but the rest of the world is mercantilist, and that means that they look real hard at trying to export more than they import. And so the United States has run a consistent trade deficit since I was in college, and I'm over 60. So
yeah.
I'm just saying, I can remember my college days. They don't seem that long ago, but it's just sad that and we don't seem to have any we don't seem to have any plan to change that. And that's going to be part of the focus of today's most interesting thing.
Absolutely.
Last but not least, on the front, this Red Book number, I looked at this, and this is in stores. This is not count, and we verified this with the Red Book people. This is what stores are doing year over year. Now, again, some of this is base effect because you couldn't go into stores physically as much maybe a year ago. Although by mid-June we were opened up in a lot of parts of the country. But this number is just gigantic. So I went and pulled this is what Red Books looked like for about the last 17, 18 years. And you could see that, we were always somewhere mostly between 0 and 5% year over year. And then, you can see where we went down with COVID, but it never got below 10%. Well, it did on this one little week here. We went down about 13, but look at how far we've been above 10% and how long we've been above 10%.
Yeah.
So this is quite the rebound. But then we're going to get into the most interesting thing, and what better way to get into the most interesting thing than to just see a giant fire?
Yeah.
Now, what is this fire? This is a fire of this is a plant in China that makes the substrates, the polysilica substrate, or the material that is used in the substrates for microchips. And our regular viewers might recall that when we dug into the microchip shortage a few months ago, one of the things that we found was that there was a major shortage of these substrates. And specifically, the reason why there were these shortages was that there had been a big fire at a plant in Japan and a big fire at a plant in Taiwan. Well, here's a big fire in a plant in China. So it's not going to get any better. This looks pretty destructive.
Yeah, I'm thinking that's pretty much several miles worth of burning right there.
This is big, and so, but the one of the things this reminds me of, and we don't tend to think of, like in a microchip economy, we don't tend to think of like old-timey stuff, like back when we were younger, when the economy was much more analog. When the economy overheated, it was literally, the assembly lines are breaking because they're trying to make too much stuff. You would literally have, fires at chemical plants and stuff because they were working too hard. Maybe they were skipping maintenance. Maybe they were trying to squeeze too much. So this is a sign to me that they're trying to get every last thing they can, and maybe somebody got careless, maybe they were tired, maybe some equipment gave out because there wasn't maintenance. But the bottom line is that to the extent that the chemicals that came out of this plant are important for microchip production, that's not going to help the microchip shortage.
Yeah, well, I mean, it's interesting. I was having a conversation with my friend Jimmy, who's a he's a managed IT guy. So he works with accounting firms, and he's like, yeah, all these people went away, now they're coming back, into the offices, and he's like, I'm up a creek trying to get equipment for them because we need to upgrade. We need to upgrade, screens and stuff like that. And he's like, because of the microchip shortage, he goes, there's like a 3-month backlog to get monitors and stuff like that because of chips. So it's not just trucks and everything else. It's some of the simplest things that you would never think would have much in the way of microchips in them.
Yeah, it's and digging in, we're finding out that it's not necessarily the chip so much as some of these precursor chemicals that go into creating the thing. This is the film on the chip that allows you to put stuff, nest it together.
Yeah.
This is an interesting headline that I saw this week, because we've been talking about shipping accidents. So the UK has they've actually, I guess they're a version of their NTSB, which is their Marine Accident Investigation Branch, has done a study on some of the things that we've been talking about with all of these container ship problems. Mm-hmm. Now, if this isn't a classic bureaucracy, just say, oh, it's too early to tell. Common themes. All right, it may be too early for these guys, and maybe they're right, but I'm on record. The common theme is that right now, we as humans don't have everything that we need to control these ships properly. Mm-hmm. We don't have these ships have gotten to the point where, again, we may not have the experience with the size. We may not have enough control. The engines may not be powerful enough. But for right now, these container ships are out of control, mm-hmm. and they're causing a lot of the problems that we're seeing in the worldwide inflation that is because of their impact on supply chains. Mm. Here you go, Port of Long Beach, another month. I mean, this is like the 8th month in a row, I think, that I've put up like Long Beach. And for those who, Long Beach is like the biggest port in the United States. Mm. It's right up against Los Angeles, which is like the 2nd biggest port. So the whole area is gigantic. And what do we have with Los Angeles? Oh, they process a record for the Western Hemisphere. So,
and still they're stacked up.
Yeah, we're talking about 10 million TEUs in a month. That's just gigantic. A TEU is a 20-foot equivalent unit, so it's really like 5 million containers that are 40 feet long.
Oh, what we need is a well-placed strike out there now, and that would just really make it perfect. So.
Hey, don't put it past the ILA, the International Longshoremen Association. They know how to slow things down. They know how to squeeze. And there's been some rumblings that some of these problems in the ports are because of ILA action. They're just not publicizing it, but they definitely know that they're at a choke point. And I mean, those guys make like 175 grand a year.
Oh, I know.
It's an amazing amount of money to be a longshoreman in LA.
The shocking thing I heard the other day was lifeguards in LA make like $145,000 a year.
Wow.
And they just put shorts on and go to the beach. So.
Yeah, hey.
I choose wrong.
Yeah, okay. This is part of it that you were talking about China earlier. Yeah. That there's all sorts of anecdotes about Chinese ports are clogged as well. Mm. And part of it is the American corn as part of the deal that Trump negotiated last year, they're, despite all the acrimony, they're kind of living up to it. And they're doing that for two reasons. One, they're kind of punishing some of their other trading partners like like Canada and Australia for different reasons. They have really put Canada on its back foot because they have cooperated with the U.S. in detaining. She's on house arrest. The CFO of Huawei.
Yeah.
And then, Australia's just, been daring to speak out against China. And so they're on the back foot because the Chinese are like, no, you're not a big enough country to backsass us. So we're not going to buy your stuff. So, American corn right now is going into China enough that it's clogging things up. This article I saw on Bloomberg, what it showed here, and I tried to blow this up, but year over year, or actually the seasonal average over the last 5 years, it's up 547%.
Oof.
This is part of the theme that we've been talking about is that when COVID hit, we realized that we were vastly unprepared with far-flung supply chains all across the world, a lot of which originated in China. And you would think that would give us an impetus to want to onshore production and shorten supply chains. This is just another reason. I mean, back last year, you couldn't get the stuff because they were hoarding it for themselves. They want to get the stuff to us because they want the money. But, now we've just, with all of these problems that we've seen from the Suez Canal to the shipping port delays and everything else, I mean, when you're talking about 550% increases, how high does it have to go before you start to make a really serious case for, hey, do we really need to get our stuff from China? Home Depot, this is an amazing story. Home Depot's having so much trouble getting its stuff that they've decided to charter its own ship. Now, to me, that's dangerous. I mean, it is literally putting all your eggs in one basket. If your stuff is on other ships, and there's a problem with that ship, then maybe it's just a little bit of your stuff that gets affected. But we've seen how the incidences of container ships, and these are most certainly going to be containers, how many container ships have had problems. If you have a serious problem with your container ship and it's all your stuff on it, wow. Obviously they've decided to roll the dice. To me, the fact that you would be literally having a major company like Home Depot saying we're going to put all our eggs in one basket, and get away from the kinds of diversification that we typically have in our supply chains, just shows you how desperate companies are. They're basically willing to suspend, what has been common sense or common practice for decades, and say, you know what, we're going to gamble. We're going to gamble that this ship is going to make it. We're going to gamble that there's not going to be a problem. That's a heck of a gamble. And what they're saying is there's so many other problems with so many other ships. They're like, well, let's maybe our ship can thread the needle.
Well, the problem is it's still got to get through the ports and everything else. So
it does. And to me, I don't know what the upside is. And now Home Depot also just a little bit of history there. One of the most disastrous CEOs that it ever had was a guy named Bob Nardelli, and Bob Nardelli headed Home Depot for a few years in the early part of this century. And who was Bob Nardelli? Bob Nardelli was a guy who had been at General Electric, and he was one of like when GE was having an in-house, basically a contest to who was going to succeed Jack Welch at the around the year 2000. Nardelli was one of the guys who was being considered. So when Jeff Immelt got the job, there was about 4 other high-powered executives that just left and got CEO jobs at other companies. And for Home Depot, they decided, that was around the time that Arthur Blank and those guys were getting old enough that they wanted to retire, the founders. And so I just remember thinking when Home Depot hired Nardelli, I'm like, Home Depot's a retailer, like, they're getting a General Electric guy. And it turned out that, Nardelli was just a disaster at Home Depot. And they let him go pretty quick. I think he was only there for about 3 or 4 years. And the reason why I'm going into all this is that one of the things he did was when he got there was that he had this GE mindset. Home Depot had its own logistics unit, trucking, and everything else. And he decided to spin that off, and it's its own company now, and it's been spun off for like 15 years. So, that was a very GE thing to do. I'm not sure that somebody else might not have wanted to have kept that, but what it does is I'm sure that, for a company that it's big stuff, heavy stuff is at Home Depot, everything from bricks to lumber, and, it's not stuff that you can put in airplanes. I mean, it's stuff that's got to be on ships, and then it's got to be on trucks and trains. And so it made sense for them to have had a logistics unit. And, I just wonder how many times over the years after they got rid of Nardelli that they were kind of like, geez, I wish we wouldn't have done that. And, certainly now, when logistics are getting to the point like, that they're considering this, if they had their own logistics company in-house, they would probably be able to do a better job of even chartering this ship, because that's a whole different deal with what you have to do other than working with brokers. And I threw this in here because I'm going to wrap up a lot of this stuff that we're talking about, but this is our Small Business Administration. This was a headline in the Wall Street Journal yesterday, and basically, that small businesses are having trouble with COVID and everything else, and the Small Business Administration just basically didn't give them any help. So what have we talked about here in the last few minutes? We've talked about the microchip situation. We've talked about clogged ports and logistics problems with supply chains, and the ineptitude of our federal government to help business. And I was going to tie this together by saying, if ever there was a case with what we've seen over the last year and a half for having stuff, in China, it being withheld, hard to get to, whatever, all of the shortages, we've had this mantra of having supply chains around the world because we wanted the cheap labor from mostly the Far East. To make stuff for us, and then it would, we could ship it to ourselves. And we started to make an effort in the last administration to be more business friendly and to bring these jobs back to America. All of these things that are happening are things that could potentially, they're another reason why we could we could do this. The costs of doing things the way we are doing are going up astronomically. Wouldn't it be cool if we didn't have to worry about these bottlenecks in ports because we were making them here in the United States?
Mm-hmm.
And my editorial point at this is that we don't even have to be business friendly, but what the current administration is doing is it's not even being business neutral, it's being actively business negative. I mean, the talk from the current administration is what? When are we going to raise corporate income tax rates, and how high are we going to raise them?
Yep.
Well, does that really give any incentive for anybody who's thinking like, maybe I could go onshore? We're not trying in any sense to try to even, publicly appeal to corporations to do stuff here at home. The only statement that I can recall of anybody appealing directly to big companies about employment was Kamala Harris a couple of weeks ago when she was down in the northern triangle of Central America, was appealing to Fortune 500 companies to hire workers down there so that their economies could improve down there and that the people wouldn't have to come up here. Crazy. So, all of these things that we're seeing, which are they're problems that could be addressed by having American people making American stuff in America, and not having to have it shipped from around the world. It's the most perfect opportunity. The reasons are lining up, here, there, and everywhere, and we just don't have a government that is recognizing this opportunity that's in its lap to even do anything positive about it.
Mm-hmm. Yeah.
And that's my editorial rant.
It didn't seem like much of a rant there, Tom, but we'll go with it. There wasn't enough yelling to it, but
well, anyway, that's
nice.
what I have for the week. I think it's interesting because when we first started talking about some of these things, they met my most interesting thing criteria.
Yeah.
And the most interesting thing criteria initially was something like, oh, here's a little thing that happened that is interesting, and let's point it out. And because if we don't point it out today, we'll have forgotten about it a week from now.
Yeah.
Like the Three Gorges Dam, and the flooding last year, that was like a 1 week thing.
Yep.
But and I know you've joked with me, but I started showing problems with shipping. It's now been almost a year.
Yeah, it was like in August, right?
I have a picture of something from the shipping industry every week.
Yep.
We've been talking about the microchip shortage since January. These are things that are not only not going away, they're getting worse.
Yeah, they are.
And and they're getting worse over now what is like pretty long time frames.
Mm-hmm.
And so I just seems to me that if we had some policymakers that were, I don't even think they'd have to be on the ball. I think they just have to not be actively anti-business, because I'm just getting the idea that we just our current federal the executive branch of our government is just actively anti-business.
Mm.
And it's a shame, but that's where we're at.
Well, good, man. I appreciate you putting all this stuff together. It was good to kind of get back in the horse this week and talk a little bit about this and catch up. Looks like the markets are just getting pounded into the quadruple witching. So we're
going into the close week.
Yeah. And it's been a pounding all day, and it's not getting much better. So it's like Bob Nardelli is running the markets today.
Yeah. So my numbers have it's off a little bit I see it's 437 right now, and it was 400 when I put it in my little on Dow points. So yeah, the interesting thing about just we're talking about inflation. This 10-year yield business and bond prices, going up, and interest rates going down. It's gone far enough and long enough that there may be something else going on here that I'm not picking up yet. Some people are saying that there's so much money sloshing around and with the Fed buying stuff, but that wouldn't have explained why we went up to 1.75% on the 10-year, and now we're down to 1.44.
Yeah, which with the potential inflation, that was the one that just doesn't make any sense to me at all.
Well, and last week when we had that CPI number that was so high, it was the highest inflation we'd seen in 15 years, and interest rates actually went down that day.
Yeah.
Now, I thought that was maybe, just a one-day, bond market version of buy the rumor, sell the news, and going the exact opposite way that you might think, but it didn't reverse. So,
don't get it.
anyhow, that is what I've got for this week. And again, I just felt like I needed to tie some of this stuff together. Okay. It's, obviously we're not in a position where we're policymakers, but we can sure kind of pose the question of like, this stuff is teed up. Why can't we get this done?
Well, this is the it's teed up. Please don't screw it up. And I don't put it past government to just every time things are good, they screw it up usually. So, and then the Fed will step in next year and blast interest rates up through the roof and cause the markets to get clobbered. So,
well, we hope that's not happening. And actually, what we're seeing with these rates going down is, the NASDAQ hit an all-time high yesterday.
Yeah.
So what we've been seeing is, we've been talking about since January that there had been this revival of value stocks relative to growth. Well, that stopped. Since interest rates have gone back down, the FANG stocks, the Manging stocks, however you want to pronounce that, however many A's and N's and G's you want to put in there, M's, that we're back in the saddle to what we were doing last year. That value is underperforming growth again. And even today, in a dramatic down day, the NASDAQ is down only about half as much as the Dow. If those are your two, the cleavage between growth and value.
Yeah. Well, I mean, it's just, it's interesting. You just wonder when the next hammer is going to fall, where all of a sudden now value's coming back up. I mean, I think it's been down for so long that it's got to start making a comeback here eventually. So, yeah,
I mean, certainly the conditions are right because, of the imbalances, but, you would hope that that what we're seeing with interest rates going down, I hope that's not a market mechanism that's telling us that growth is slowing down.
Yeah.
Because that's certainly a possibility. You can draw that inference. I mean, the bond market, there are a lot of distortions in the bond market right now. But it's still, and so its ability to sense what's really going on may not be as great as it usually is, but it should be able to pick that up, and I hope it's not picking that up. But we certainly got to keep an eye on that.
Yeah, well, I mean, it's classic stagflation. Your prices are going up and your growth is slowing down. It's just not. Yeah, you don't.
Yeah, and of course we'll I'll blow my horn on that one because I talked about stagflation back in January before it was fashionable.
It was cool, yes.
So.
All right, my friend. Well, you have a good weekend.
Thank you. You
folks,
too.
As always, we're ramping up shows. We've started to do some shows in between our normals. So we're getting to the point where we're going to be producing 5 shows a week, a few short shows, and then some of these longer format ones where we really get into the weeds and get into what's going on in the economy. But what we're trying to do is give you a big picture of all the things that affect business and business owners and how we can help each other move forward. So thanks a lot for Tom for coming on every Friday on this stuff and really sharing his insights on what's going on in the market. We are on now all platforms, everything from YouTube to Rumble to Podbean and all the podcast channels that are out there that accept video. So check us out, moneytrekker.com, which is money, TREKKER.com will take you to our website. You can see all the upcoming or all the episodes and then connections to all the different places where you can listen and watch. So we appreciate you. We'll see you back here next week. Thanks a lot for joining us on the Money Trekker podcast.